Hey, Katie. Thanks so much for having a conversation with me today. I really just kind of want to dispel some myths in the marketplace. Also, I thought about having this conversation over the weekend when I was just thinking about first-time home buyers and the conversations that we have. I'll tell a quick story, at least from my experience. Back in 2015, I relocated my entire family to Washington and I owned a home in Texas. It was a pretty nice home. The market was a little slower there at the time. And so I turned around and ended up renting the property to a bunch of airline pilots who ended up paying me like 3,500 a month, which was like a $1,500 cash flow situation. So I thought for sure I'd be able to buy. My husband and I were W-2'd employees, and I made six figures at the time as a sales accountant. And then I went and called this agent on Zillow, and she was really funny and cool, and I we got along really well. And I was like, yeah, I don't need to interview anyone else, she's great. And she was telling me all about Seattle. We took a tour of a couple of houses, and then she introduced me to her supposed preferred lender. And I was like, yeah, all right, we're going to do this. I give him all the information, and he runs my credit score, and he's like, oh, you own a home. Oh, we're not gonna it will be debt to income ratio will be way out of whack because you own a home. And so I literally just kind of stopped in my progress in 2015 and rented for the next 4.5, 5 years. I didn't end up buying until 2021. And knowing what I know today, I think to myself, damn, if I would have just done my due diligence and researched who I was using as a real estate agent, and two, maybe had a second opinion. I mean, you don't go to the doctor's office and say, hey, you've got cancer, and now you don't go and check it out with somebody else. I literally have lost hundreds of thousands of dollars because of the change in the market over the last 6 to 7 years. And so why I thought it was important to bring up this conversation and have it with you is because, over the last 6 years, you and I have worked together in real estate and also in lending. And I thought, God, I should ask Katie what she thinks about that. And, just have a conversation about like, what could I have done differently and maybe help somebody else.
Yeah, I mean, here's the thing, I can't speak, because guidelines change year after year, right? However, I do know that that guideline of having a home currently, even if you don't have any landlord experience, that you absolutely can offset your mortgage payment if you do have a lease agreement put in place. Now, the agencies, which are Fannie Mae or Freddie Mac, which majority of who us lenders go through as far as our investor, will allow you to take a departing primary since you left out of Texas into Washington and use your current rental income, but they'll hit you with the 25% vacancy loss. Now, there's some things behind that and what we can do that make up the debt to income ratio. But, maybe this was a lender who, just didn't care to look into the guidelines, or, again, you have to understand all the gray areas of those guidelines. So I really think that that was a lost opportunity, unfortunately, for you to be able to buy a property, because again, you can offset that rental income. Sorry. He can edit this out, right?
Yeah.
Okay. Um, let's see. What else? Um,
I think we can move on past that one, right? And then talk about for first time home buyers, like how would you recommend, and not even first time home buyers, this is like I kind of run across this all the time now with the interest rates being at 7%, right? Like let's talk about some stories from the fields. You and I particularly have several clients together, and this happens often where they're like, "Oh, I saw on I even forget the website that they used. Rocket Mortgage. Well, maybe it wasn't Rocket Mortgage, but they,
Bankrate.com,
right.
ownup.com. It's online lender. It should be, you know, can fantasymortgage.com. I mean, all kinds of things that the consumer will go to that don't understand how it works, and they're driven by rate. And in this market, in today, like everybody thinks that rate right matters, that's the only thing that you should be focused on. The lowest rate is going to give you the lowest payment, and it truly is not true. It's all in how you structure a loan. It will make home affordability. Like you and I do really good job at educating our client, and you negotiating behind the scenes. They don't realize how much goes into it, of you negotiating that seller paid closing costs, even going up a little bit on that purchase price in order to get that money back, how much lower, and what we can do and be creative in order to get their payment lower. Or
What do you think? So, like, oftentimes, like you and I, you've taught me over the last 6 years, really, like, I always tell people I know enough about lending to be dangerous, except go ask her your fine. Go ask her. She's your lender. I'm your agent. The reason why I've spent so much time educating myself is so that I understand truly how to negotiate in a way that's going to make my clients feel comfortable in their payment. So a lot of times when we're having these conversations, I'm explaining it to them about how I'm potentially going to structure the deal. And I'm always telling them at the end of the day, what really matters, right, is how much you're going to pay per month. Because in a place everybody is talking about affordability, versus paying rent, for example, I'm like, at least you're going to be living in your piggy bank, right?
yeah,
Can you talk
exactly.
through that? Like more like how sometimes you'll do mortgage coach for my clients?
Yeah, I like to do a full on analysis, right? To really help them understand the short term goals and long term goals. And that's a big problem and thing that I run into is that people these days, for whatever reason, they're looking for houses like they look for cars, right? They're going in trying to find the house first, but it's really hard to take somebody who's looking at $1 million homes and back them down to maybe the five or $600,000. And in your market, your average medium house pricing is probably 650,000. Am I
More,
right? Or
more.
more, right? And so going from just that little bit amount, and it's like a sticker shock, which I think you just did a HGTV special on sticker shock in Seattle, right? So how
Right.
awesome is that? It's a true example, right? Of, really being sitting down, understanding and being educated with how much you can afford, because there's always going to be two numbers, right? There's going to be the number that I can get you approved for on paper, then the actual what you're comfortable with. And again, it goes back to the lowest rate. You don't want to be necessarily, I mean, yeah, it's great if you can get into a low a purchase into a low market or interest rate market, but then you're going to be paying a lot more for that house because everybody's coming in. So if you are purchasing in a little bit higher of a rate in a market like we are in today, and you're able to negotiate behind the scenes, once it does come time, because market shifts, you could be in that house for, it took me personally 5 years before we got into that 2%. Now we'll never get back there again, I don't believe, because something else would have to happen and it's a whole nother conversation. But if you do purchase in a 7% rate environment, there is absolutely opportunity for you to eventually get that payment down a little bit lower. But with the negotiation behind the scenes, with them understanding and us being able to get seller paid closing cost, or what we do, lender paid closing cost, in order to then get you like a temporary rate buy down until the market does present itself to be able to refinance. And then again, that chart on the mortgage coach will give them short term and long term potential, and it will show them how much money they're currently paying in rent. For example, my client, in 10 years, she'll pay $150,000 in rent that goes nowhere. Versus if she does buy today in this rate environment, she would pay $50,000 in just principal reduction. That's huge. That's a huge amount of equity that she is putting her money living in her piggy bank. So wouldn't you rather get $50,000 on something rather than paying 150 on nothing?
Yeah.
So it really is sitting down, getting educated, understanding how you can buy is huge. And a lot of my first time home buyers think that they have to have a 20% down payment. Biggest misconception. You can put down a 15% down payment and not have mortgage insurance. You can put down a 10% and not have mortgage insurance. You can put down as low as, for a first time home buyer, 3%. We have down payment assistance programs. I have an in-house down payment assistance program. And of course, we have Washington State. So there's all different ways that you can buy and be a homeowner these days.
Yeah, and I think that's why I wanted to have this conversation with you because I think people are number one, they get really scared of the rate environment that we're currently in, and they just don't have a good understanding, or maybe they're a little scared, right, of like finding out what their options are. And then also, I'd like to know from you, like, I know that you're a bit different. It's why we work together as a lender, but like when people are looking for a lender, like what should they expect from a lender?
Education really is somebody taking the time to ask the right questions. Is this lender that I'm talking to, are they asking me about my short-term, long-term goals? If they don't ask you how long do you plan on being in this house, they should run. They're not listening, they're not caring, they're not getting to understand what their goals are. So how can they possibly help structure a loan based on what they're looking to do? They're just there to give them a rate. That's not somebody I'm going to put the largest purchase that I'm going to make ever probably in my life. And I don't want to give them that power. So it's really, really important that they also have a good understanding of their financial goals, short term, long term, that they work with an agent, that they come up with different ideas, creative financing, and also like in your situation, understanding the guidelines, understanding what they can and can't do. And if they're not saying, you know what, let me find out, because guidelines do change. Like during COVID, I felt like I was brand new into the business because guidelines were changing weekly. And there are some times still to this day, even myself, I'm like, you know what? It was like that during COVID. Let me double check myself. It's okay for somebody to get back, and as long as they're following up, to make sure that there's not like a different way that they can do something. So,
When you have a conversation, like what does that look like when you get introduced to a client? Like what is your process?
so I'll get them on the phone. Usually, I want to put a voice to a name, talk to them, get them to know me a little bit more personally, and understand like how long have they been looking? What idea? Like I want to understand what they know or what they don't know, because that's going to be important. Like sometimes I have engineers, that are very analytical. So then I know that I absolutely need to set up a mortgage coach for them. Then there's times that people are just they're first time home buyers, they're kind of scared, they don't understand it, they don't know, so they need a little bit more of me holding their hand, and also just to have that open dialogue. No question is stupid. There is no such thing, and if I have to repeat myself several times or maybe a different way, that's okay too. I don't mind you asking me the same question. As soon as I tell them that, it's almost like their guard goes down, and they're like, I really appreciate you saying that, because I don't, they feel that they should already know this. No, you don't, right? That's why you rely on a team, your agent and your lender, to help walk you through this process, to understand what step by step, what is going to come, like what expectations are going to come next. So I'll have that conversation. Then I'll have them fill out my form. I do a soft credit pull. And then I look at everything high level. I do all of my calculations because I want to understand how they get paid, how often they get paid. I need to understand that so that I know, again, what on paper I can get them approved for. And then I want to understand their budget. So I look everything high level, and then we have a little bit more in depth conversation, and I get to know them and their financial goals. And then we take it from there.
That's good. That's good. I mean, I rely on you doing that also just as an agent because from the negotiation standpoint too, a lot of times, people come to me with big dreams, and sometimes even in our market, I have to have what we call the reality check conversation, right? And
Good.
I'm never not encouraging somebody to go big, but I oftentimes have to tell people like, especially first-time home buyers, like, this is not your forever home. It's not. Like, we just need a starting place to like build some equity to move up, right? Because there's either a move up situation happening, and sometimes like a downsize situation as well. But it's the conversation that's really important, and that's why our partnership is so important and making sure that they really truly understand what their buying power is and how we can negotiate it to effectively meet their financial goals. Um, all right, I want to shift into the story. We have a client together, and I want you to talk about this because this is like, it's really good, and I think it's kind of juicy. I just want to talk
Yeah.
from your perspective.
I've been working with him for over a year. And, every single time we'll do a pre-approval, pre-underwritten pre-approval, and then it's taken them forever to find a house, and rightfully so. I mean, they're looking in the 2 million price point, right? I mean, it takes time. Some of it's been just situational. They, are in the tech space. They receive RSU income. And for those that don't know, it's restricted stock units, they're grants. And there's specific guidelines and different investors who will accept them and who will not. So you have to be very versed in who will do it and also the calculations. So, and, recently, they found a property. So, congratulations. And, up until this point, I mean, in this industry, do I expect people to, shop around, get to know and understand other options? It does happen, but you have to be very careful. He went to ownup.com, which is some sketchy website. And I don't like to knock anybody else or any competition, but it's a website that you go and shop lenders. Well, I looked up the lender, this lender that he spoke to, if it even is a real person. Well, I looked up the NMLS number, which you can go to NMLS consumer site and look up anybody's loan officer's license number. She recently just got licensed in August of this year, or of 2024, sorry. And there's no way. I mean, I had no idea what even an RSU was when I first started in the industry. And then in January, she just applied for her Washington state license in January, and she's out of Philly. So I kind of find it hard to believe. And the loan estimate that he sent me didn't even have a credit score on it, didn't have a lot of things. The APR was actually the same as the rate, yet she had administration fees in the loan estimate. Well, anytime there's cost associated with doing a loan, which are your processing fees, your administration fees, your underwriting fees, that affects the APR. So, us as a lender, we have to give you an APR expressed as a rate, right? There's fees associated with doing a loan that we have to express as a rate. That's what an APR is, right? The annual percentage rate. But you, as a consumer, are only paying whatever the interest rate is on that principal balance. So if they are the same, that's a red flag. You have admin fees, but you have the APR is the same as the interest rate. That's not a real quote. So you're going to put the largest purchase in the hands of somebody who just got licensed and not even having an accurate quote. And here you are contractually obligated to this seller, who's a builder, by the way, who's going to charge you. I don't know what their per day charge is. What is it,
Like yeah,
$450?
it's like $400 per diem per day for every day that it does not close on time. And
Yeah,
actually, in Washington, with the finance contingency, you have to know who you're going to use within 5 days of mutual acceptance. Or
right.
you have to get seller approval in order to change.
Correct. And so again, when you're working with a team, as you and I have for so long, I've called the agent, they've vetted me, they see how long I've been licensed, some part of that decision is made up front, right? So although you as a consumer could switch, you can, you have that luxury of doing that, but making sure that it's right.
Well,
All
and
of
then
this due diligence should have been done a year ago.
right. Well, and also too thinking about like, somebody who's newly licensed, right? And part of the negotiation strategy in which we did, you and I had come up with together. So my fear as an agent is I just negotiated $50,000 in seller paid closing costs. What happens? What you tell me what happens if they can't use it or they don't use all that $50,000 that I just got them?
It goes back in the seller's pocket, and there's nothing you can do about it. So that was wasted effort, and it's not good for the buyer
Well, and
or
I
for
could
the
have taken
seller.
money off the purchase price too, right?
Right. So they basically just bought at a higher price and don't get to use that money at all. So you have to be very careful. And there's also too, and if you're new to it, there's a thing like you have minimum contributions that you have to meet. Like the minimum contributions in a loan. And if you don't meet those, you lose it. Like there's no way around that. So you have to do the math as well as best as you can up front. And there's ways around with that much money in seller paid, we're doing something that will create fees, right? But it benefits your buyer.
Mhm. Can you explain, like, $50,000 in seller paid closing costs? It's a lot of money. I mean, hell, I even have agents who follow my pages and look at my stuff, and they're like, sometimes they're shocked by how much closing costs sometimes I ask for. Can you explain the different, like what you can use when you have that sort of amount? And mind you, you and I always talk about what that max amount is. So for example, if somebody puts 5% down versus 10% down, the percentages in which you can ask for in closing costs. And then if it is a really large amount, how are you applying that?
So depending on which program that they go, FHA, you can get up to 6% of the purchase price and sell interested party contribution. So that can come from the lender, it can come from the seller, it can come from the agent, it can come from any interested party. In majority of the time, it's going to come from either the seller or the lender. Then you have, you know, conventional, which if you put down 3 to 5%, 3% is max. Once you put down 10%, then you can get up to 6%. Then if you put down 15% and plus, you can get up to 9%. So again, sometimes you have to be careful because in order to use those, it has to be created into fees. So it closing cost. And so sometimes people get caught up in the word fee, but there is a program and people are starting to understand it a little bit more, and especially agents, of what's called like a 1 year buy down, a 2-1 buy down, a 3-2-1 buy down. So I'll do the 1 year buy down for an example. So you have 1 year, the one means 1 year, 1% of your note rate. So you're going to be in a 30-year mortgage. Let's say your note rate is 7%. That first year and first year only, you can get into that property at 6%. Okay, so you're going to be making the payment as if it were a 6% interest rate. So you, as a buyer, consumer, get to benefit from a lower monthly payment, which the sellers were using the seller closing cost in order to do that. So if you were to refinance, if the market presents itself within this year, usually, we don't want you to refinance until you've made 6 full monthly payments. And if it does, whatever money is left over in this account, it's like a subsidy that makes the payment and the difference. You get to use toward your payoff when you go refinance. So you don't lose that money. So if you do a permanent rate buy down, you lose that money. So again, it's understanding what the consumer, what they're wanting to do short term, long term. But again, we can take for your customer with the $50,000, we're doing a 2 year buy down because they feel that they're going to refinance within the next 2 years. So that two on their first year, we're going to be able to get them into this property at a 4%.
Mhm.
So it helps them. And they just got a new job. Oh, they also switched jobs too.
Yep.
So that's the biggest don't on the list. So there's
It
that
was
little,
after we were pretty much in contract that that came about, or
yes,
right at it. Yeah.
yes, yes. Yeah. So there's that. So this will allow your client, and me looking at his contract, we were able to, I was able to bring up the fact of you're going to get an RSU yourself. Like I'm looking at your wife's RSU. She's pretty consistent. She's already received it. She's going to be getting future grants, but you're about to get a large payment in the next year of RSU income, and it's going to invest. You can take that vested RSU right after this year. And if the market presents itself and refinance and put down a principal payment and do a recast for a principal reduction.
So
So he's
I'm just curious, now that you mentioned the recast, let's talk about that because a lot of lenders would be like, "Oh yeah, you can refinance the rate." Why would you suggest a recast for him versus a refinance?
because if the market doesn't present itself with an opportunity to refinance, he can do a principal reduction and they can recalculate his monthly payment because the whole thing he's worried is about his monthly payment.
Mhm.
And it doesn't change the terms, it doesn't change the rate. Now, could you be charged for them to do a recast? Yes. It could be anywhere from $250 to a $500 charge for the servicer to basically recalculate their monthly payment based on a new principal amount that will help lower his monthly payment without having to refinance. I mean, of course, majority of lenders, they want you to refinance. That's where they make their money. It's going to cost you anywhere from five to seven, $10,000 to refinance, depending on, the property amount, the size, all of that. But if it doesn't make sense for the client, you absolutely don't need to refinance. You can just do a recast.
Yeah, I thought that was like such a great thing for you to bring up to them because obviously it goes back to like, we're trying to do what's right for the client and having them helping them to understand like the benefits of like working with somebody who's been in the business for a really long time, but also understands how to structure the loan
Yes.
correctly, right? So
Yes.
I'm curious, in your opinion, like, do you think they're gonna go with the new lender that's been licensed a couple of months, or do you think they're gonna stick with you?
I think I hope that they're gonna stick with me, to be continued. I mean, they are bamboozled by that rate. Okay. But I mean,
I
and
feel
I,
like
I
they
don't
went on
blame them.
the
You see the shiny, bright, ring and you want it until you figure out that it's not real. So,
I don't know. It feels like a catfish situation to
oh,
me.
completely.
I'm all into life after lockup right now, and there is a girl that straight up catfished the guy, and yeah, it's a pretty funny episode. But anyway, it reminds me of this situation specifically because I'm like, there are so many times out there that I hear these stories, and it's like I can get this or I can do that, and I'm like, that is the biggest bunch of bullshit I've ever heard. But you know. Like people don't know what they don't know unless like we have conversations like this and open dialogue to help people understand the realities of what it is. Um,
Yeah, I mean, just a year ago, she was unemployed and she was a therapist. I think I forget what kind. It tells you all about. I had a client that, and nothing against, a 7-Eleven clerk, but she was a 7-Eleven clerk. What is a 7-Eleven clerk going to do with helping you finance $1 million house? Do you want the person that just was ringing up Cokes and ice cream? having that kind of decision over your $1 million house and how to structure a loan. She possibly cannot give you the financial advice without having the experience. I'm sorry, but every situation, every negotiation is unique. So you cannot possibly understand unless you have that experience. I helped 132 families last year purchase a home, $60 million worth of real estate. I mean, you did $60 million worth of real estates. And, again, every person that we helped had a different situation, unique to them. So finding somebody who's been in the business for a long time, understanding and has that experience is going to be the most important decision too, and understanding their needs.
Yeah, and I don't want to I think you're right. Like we never want to knock like we all started somewhere, right? It's
Sure.
I think back to like when I first became an agent, it feels like a lifetime ago, but like I would say the difference sometimes, though, maybe with how I started in real estate versus maybe some other people and what people should look out for. It's totally fine to work with a newer agent, but please know if that agent is going to do their research to have a good understanding. It's the person that's honest and says, you know what? This is my first year doing it, but I've got a managing broker who is right by my side who's going to explain all of these things. They're the person who's saying, I don't know the answer to that, but I'm going to go get it for you. Like you want the person who's going to go get the answer and not just pretend like they know what the answer is. And
Exactly.
sometimes it's hard for people to know, but I feel like gut check yourself, right? Like everybody has an inclination of what somebody knows. And I think the person who is honest and says, you know what, I don't know that answer, but I'm going to go find it for you, then maybe I would give that new person an opportunity to do such things. But it isn't going to outweigh experience and knowledge and understanding how the contract works and on your terms how to strategize. And I imagine it's even more difficult with financially because of guidelines, structures, things change every day. So for example, you've been in the business over 20 years, but you could also have somebody else who's been in the business 20 years and they kind of get a little, lazy because they've, you know,
Fatigue. I like to call it lender fatigued. Yes.
right? So
Yeah,
like
it's true.
how often is somebody going and researching guidelines? I mean, I know I talk to you all the time and you're like, yeah, I'm looking up the new rules for this, or I heard this may have changed. And or I like I'm gonna go find a way to make this happen.
Hmm.
And you've been notorious for like making something happen when everyone else said it couldn't.
Right.
Which also goes back to the first time homebuyer situation of like people who are scared and not sure that they can get something done. It's like it's really more about finding the person who can get it done. And I think that's kind of the important message here.
Yeah. I mean, I have a big rule. I mean, even in my own company, you have to tell me no 4 or 5 times before I'm going to listen. It's just, it's in my nature to like, well, why not? Ask the questions, why not? Understanding the whys behind it. If it doesn't make sense, keep finding it. There's got to be a way. We can all work with 15, 20 investors. There's hundreds actually investors out there who are willing. We just have to find it. We have to shift through it all. But I agree with you. I mean, if somebody is saying, I need to find out the answer, because even as long as I've been in it, I'm still finding out the answers on certain situation because everybody has something different. So you're right. I'm not going to say that somebody who's really new into the business can't get it done, because I'm sure that they can. It's just when you have a unique situation like variable income. And when I mean variable income, it's overtime, hourly, shift differentials. If you're a nurse, if you know you if you receive RSU income, if your pay is a little bit different, or even pilots, understanding how they get paid and calculating their income is going to make a difference. And unfortunately, being new to the business, you have to learn and you have to make those mistakes. And in your client situation, it can be very costly,
Right.
right? He's got earnest money on the line. When you are under contract or contractually obligated, you are essentially handing over your earnest money deposit to that lender. And I've never lost anybody any money, and I'm not in the business to do that. So it's a lot of pressure putting on the lender that I'm not willing to take. So I do everything up front to make sure that when I write that pre-approval, we're closing.
Yeah.
And it's important for you to understand that, right? Because when you're doing those negotiations, your time, your efforts, that's even your customers' time, like we need to close. That's also you're responsible because you gave the referral, right? And so making sure that their money is protected is your duty.
It is. And also too, like I'm not like I don't care who knows this. Like, we're straight commission, right? As much as
Right.
I love to show houses, 30, 40 houses because I like to shop and I do like that, right? That's fun. However, I intend on is how I feed my family. I intend on making sure that we are going to get to the closing table, A, so that you have a home and a a great financial investment, but it's also how I feed my family. So
Right.
I am 100% making sure that referrals that I'm sending out are going to get to the closing table. And that's why I think it's so important to have a conversation about how and why a lender should be so detailed. I do want to shift the conversation a little bit. Not that I want to hear your take on a few things. Not that I want to have a political conversation. We'll try to, be neutral like Switzerland. But I do want to hear your take on policies and things that like I have clients that are like, oh, everything's going to be great. Interest rates are going to drop. And then I have other clients that are like, oh, I don't know what's going to happen. So from a financial perspective, can you enlighten us on some things? Give us some details on what's happening.
I mean, yeah, there's a shift with every administration that takes over every time, every 4 years, depending on what they do, what policies they put in place, executive orders that they sign. I mean, it's, you know, we nobody truly knows what's going to happen with the market because the president doesn't have that much control over the rates. It's the policies that they put in place. One of the things in the news, that's going on specifically, right, is our new administration or our new president is talking about taking out, the not taking out, but shutting down the CFPB and the FHFA and possibly other agencies, which I mean, the CFPB is a Consumer Financial Protection Bureau. They're there to protect against like, reducing the risk of, predatory lending, promoting stability, encouraging transparency and compliance. And they have access, they can go directly to the treasury and pull money out. They just shut off the funding and it was $711 billion. I'm sorry, but what does an agency need $711 billion for? I mean, what is the FTC there for? It's a Federal Trade Commission. We don't need the CFPB. If we get rid of the CFPB, it's actually good. It's actually will help tighten up some of the some of the strict guidelines that we have that, maybe more of our self-employed borrowers, more of our investors can actually, buy housing. There's just a
Hang on,
lot
sorry.
of,
Say that
huh?
again. Sorry, at some reason it muted you. Say
I
that
was
it would
saying,
help.
some of the more stricter guidelines were put in place because of the housing crisis, right? Higher risk, poorly, regulated lending practices and stuff like that. I think we are, you know, in a shift of, for example, the FHFA, right, which controls Fannie and Freddie Mac. They're in conservatorship right now. And the reason why they went into conservatorship was because of the housing crisis, and government had to bail out Fannie and Freddie. Well, they paid off their debt. They've been paid off for years upon years, and they're still under government conservatorship. If they shut off the government, if they no longer are government conservatorship, now they become private. Now you're going to see guidelines being uplifted and being a lot more. It's going to be easier, and we're going to bring back some of those loans, back pre housing crisis, and people are going to be able to buy. It's going to be easier to kind of buy. Now, I think we've all learned a little bit of a lesson here in what happened in 2008. We don't want that to happen again. But 80% of the employees right now who are in the risk management at Fannie and Freddie Mac have been here post housing crisis.
Mhm.
So if you think about it, the lenders, like, most of your banks and stuff like that, that do like, portfolio lending, they're already writing loans that are a little bit less lenient, and because they know that conventionally if you go to Fannie and Freddie, you can't get it done. So there's some of those loans that have been brought back. So I think it's actually a good thing in what's happening, and we have the Federal Trade Commission to protect our consumers. And I think, again, if the consumer gets the right people, gets the right agent who has their best interest, gets a lender who has their best interest and has ethics, it's going to, that is a way, or that's what they should be looking for. I think it will help. I mean, it's going to make housing more affordable. It's going to be lending a lot easier. So hopefully that answers your question.
I think so. One last thing I want to cover. So sometimes I get asked this too, but from a lending perspective, if a consumer is looking for a lender, what questions should they be asking up front to help guide in their decision?
Ask that again.
If, as a consumer, I am interviewing different lenders to work with, what are some of the questions that I can ask to help make sure that I'm choosing the right lender to work with?
I'd ask about their process. Walk me through your process. Walk me through how I'm going to understand how I'm going to buy this house. What options do you most recommend? What types of loan do you, do you, is there creative financing? Can you help me with negotiations? Do you work with my agent to help with negotiations? What times are you available?
That's a big one.
Because if it's on the weekend, I'm sorry, having and nothing against the banks, but if you can't get a hold of somebody on the weekends, that's majority of when contracts get written and executed,
Mm-hmm.
right? And when you're making a swift decision, you have to be available. And so, you know, um, and sometimes you're busy, your clients are going to be busy Monday through Friday. They have their own job, they have their own family that they have to, and so sometimes they need to talk to you after the kids have gone to bed. And having that availability to make this process a lot smoother, and having ease of knowing that things are taken care of, is important.
Yeah, I think that's a really good, I think that's a really good outline. And of course, I mean, I think some of that has to do with like how you feel about the conversation after. Sometimes it's just a gut check, right? At the end of the day. But
Yeah.
having somebody being able to explain their process, I think is really important. Um, it's the same thing with if you guys are looking for an agent, right? A part of the process for me is always like I'm always willing to show the first house, for example, because especially with the National Association of Realtors and everything changing, I think it's really important that the client and I either meet face to face or minimally I require that we have a Zoom call. My Zoom calls last between 45 to 60 minutes, and I really do walk them through start to finish the buying process. Now, sometimes it can feel like I'm literally putting a fire hose to your mouth and it's a lot of information. And we will repeat it likely over and over again. But I do think it's important that whoever you're working with is able to explain the process start to finish and what is it like to work with an agent. And then not just what it's like to work with an agent, but what it's like to work with me individually also. Because I don't take on every client, and sometimes, the client and the agent don't mesh. And it really should be, this is being that this is either your first or second or third purchase, it doesn't matter. It should be a fun experience. You should be able to feel like you are being guided, educated, and I don't care if you've bought two or three homes. Every time you buy one, the process has changed, the guidelines have changed, the rules have changed, the contracts have changed. I know in Washington alone, I think we've had like, I don't know, 10 forms changed in the last like 2 or 3 years. So, I
Yeah.
mean, it's constant education and constantly having to know and make sure that you are negotiating appropriately.
Oh, absolutely. I mean, I'm licensed in 6 different states. Washington is one of the ones that actually have been ahead,
Mhm.
even with, having an agency agreement with the buyer. You guys were doing that a whole year before even the NAR settlement came out,
Oh, yeah.
you know?
2019, I think, is when.
Yeah, I mean, way before, and I think it's great, is having a clear understanding of the relationship. You're entering into a relationship really of like, hey, you're signing off that you're gonna protect me and do the best of what's best for my interest, and in turn, I'm gonna exclusively work for you. So,
Yeah, I've heard some crazy stories recently about like agents are like, I can't show you a house unless you sign a contract. Yes, number one, yeah, so the rule is we can't show a house and we can't show a house, or we can show a house up until it's reasonably I don't know what I'm trying to say for that word, but we can show a house until it is like we can show one house, okay? Like I don't have to have a contract for that necessarily. But the caveat to that is that you don't want to be signing a contract for 6 months with somebody that you've never even met just because they force it. So as a buyer, you need to understand what you're signing. And if that agent isn't explaining to you in detail what it is that you are signing, you should run. Because as an agent, I can sign a house, I can sign an agreement just to show one house, right? So if that is their rules or it's compliance where I can't show you a house until I have a signed agreement, fine. But it better be for that one address because the likelihood of you buying that home the very first time you see it, probably not going to happen, right? So you're safer to do that. But if you have but please read the contract and know that you're not signing a 6 month agreement with somebody who has never even talked to you about what it's like to buy in this market or what it's like to work with an agent. Because I think that is the scariest of things that a buyer could put themselves in harm's way, or they don't understand the contract. They think it's just to see this one house. It's actually for 6 months, so they enter an agreement with another agent. Well, guess what, Mr. or Mrs. Buyer, you are now on the hook to pay two different agents. So I really like to make sure that we are explaining that from the jump. So for any of you buyers who have questions about that, make sure you read the contract or speak to someone, multiple agents, right? Have a conversation. I always tell clients, I'm like, you should interview other agents. It's totally fine with me. Like, have those conversations. Google your agents. Watch their social medias. Figure out if you even like that person. You know,
yeah,
I mean, like, I know.
reviews have been lost. It's like just because they're an influencer on social media, doesn't mean that they're going to be the best agent because they're making, potential money off of being an influencer on social media. But, just seeing their stats, seeing their reviews, those things are going to matter.
Right. And also, I like to tell people too, just because like I've sold, I don't know, 40, $50 million in a year also doesn't make me the right choice for somebody, right? Like
Sure.
I think you have to, or anyone else who sells a lot of real estate, just because they sell a lot of real estate doesn't make them the best person. For my clients, I like to individually cater to each one of those clients and make you feel like you are the only client that I have. And if I don't do that, then I feel like there's a lost piece of our, it's just lost, for customer service and all kinds of other things because and also I just relationally want to know my clients and have a relationship, be able to call them. I feel like they're family and friends by the time we're done with the transaction, but which is also why I pick and choose who I work with because I don't want everybody to be a part of the family. But
Right.
it should be the same way for any buyer or seller. Like you really, really do need to know who you're working with.
Right. And that's a good point that you bring up because, you know, uh, some of my Texas agents here, that I work with, and they say it all the time because I ask them like what do you say to your clients that, to introduce me? And one of them is like, there's the reason why I refer you, Katie, or refer my network, it's not a monetary gain that I get out of it. Doesn't do me any, I don't make any kind of kickback or anything like that. It's because I have personally closed more, loans or gone through more transaction, and it's all about the service in which these people in my network can provide, that I can go in here with ease. Once we are under contract, I know you are going to be taken care of. Simple as that. And, like I don't have to worry about anything. I don't have to worry that if there is a hiccup that goes through into the process, because there are, there's going to be times where, you know, I can say it as much as I want and tell them the do's and don'ts of buying home, but I've had somebody apply and got a car right before closing. And that
That's a
that
big
car salesman told my buyer that it's okay, they've already pulled your credit. They won't know. They were trying to sell you a car. Of course they're going to tell you that. You know, I was actually able to get around it very, very, very last minute. We were able to pay off some other credit and get a gift from a family member and able to offset that new car payment that he decided to get. And we were still able to close on time. But it's the swift action, it's the swift thinking of, okay, this is what we're going to do. Okay, we're in this situation. This is what we're going to do. And the agent had no idea. And I do that purposely because I want to make sure that we find a solution before there's a problem. And again, like that is very important within, and it goes down to if your client needs a CPA, if your client needs a financial advisor, if your client needs insurance agent. You have no monetary gain in doing those referrals. It's because of people that you have done business with and that are going to take care of your client. And having an agent who has that a part of their network is huge and
yeah,
who's been doing it for a long time.
absolutely. I
So,
mean, my referral list is tight. I don't give out a lot of names. They have to give the utmost of service before they get their name on that list. That's
yeah,
100%. Because it's a reputation thing at the end of the day.
right. And it's about how quick they're able to get back to your client, how the best advice that they're able to give to your client, a fair, you know, whatever it is, like a fair consultation or price or advice that they're giving the best to your client at the end of the day. I mean, that's how I help with insurance agents, making sure that not only are they giving them a fair monthly price, but how about the coverage? You can go with somebody cheap, but if they're not giving you the proper coverage and getting into the house and you have a 5% deductible, how does that help our client?
Right. Yeah.
So
Our insurance is a hot topic too right now too.
sure is.
Yeah.
I mean,
Oh, I don't want to take up any more of your time today. Hopefully, we can have other conversations and other discussions, especially like as 2025 progresses. I'd like to see, well, what is your prediction? Are we going to see a reduction in interest rates anytime soon? Because everybody wants to know that.
I'm hopeful. I'm definitely hopeful that some good change is going to come. If we keep reducing spending, naturally interest rates will go down.
Okay. And
So
jobs report, I know that was put out last week. How did that affect the interest rates?
interest rates actually went up a little bit on Friday, just a little bit. And matter of fact, here, I'll go check them right now. Let's see what's happening in real time. So, all right, give me just a second as I log in. And a lot of times people, oh, it's improving. So the 10-year treasury is kind of what we monitor. Right now, it's at a 4.49. And so that's probably going to put your interest rates right at around 7% right now. Let's see what is
That's a little
happening.
better.
It's a little bit better. I mean, we were at 7.1, 7.2.
Okay.
The consumer price index is about to come out. Um, and that is inflation, right? So as we continue to improve on that, um, so this week, what is coming out this week is the consumer price index, which is going to come out on Wednesday. Then we have Powell's semi-annual testimony, which is going to be huge, what he says to the press and how he comes across. That's going to affect our bond market and how investors react. There's a 10-year auction. Then we have the initial jobless claims report that's going to come out on Thursday, the 30-year auction. So that will be huge this week. The consensus is to continue floating. So if you're under contract, you kind of want to ride the market. If you're going to close within the next 30 days, 20 to 30 days, you probably should take your chances in floating the market.
That's really good. That's good insider information.
Yeah.
Thank
And
you.
that's another thing with my clients. And I know this kind of drives you crazy. I'm a huge risk taker. Okay. So I look at this every day. I watch it and we kind of strategize on when the best time is to lock. I've saved my clients thousands of dollars by doing this. It is volatile. It's like going to, I mean, you know this better than anybody. You go to the casinos, you put in your money, and then you're either going to hit big that night, all night, or you're going to walk away and just be like, man, I just lost. Um, I'll say more often than not, I've been able to do some really good things for my clients, and it was worth the risk. So, um, I'm not a huge risk taker with my clients, but again, it's up to them on what they're willing to do.
Yeah,
So,
I think that's really good information. Well, thanks so much for taking the time to have this call today. We
yeah,
are going to wrap it up. This is Katie Porter at Gold Star Financial Mortgage Company. Did I say that right? Gold
yeah.
Star. Okay,
Gold
good.
Star Financial,
Great.
Gold Star Mortgage.
Okay, good. There it is. All right, you guys. Well, thank you so much, Katie. Have a good
Yeah.
afternoon.
Take care.
Take care.
Bye.
Bye.